Today we're going to be talking about one of the largest companies in China. This is a company that a lot of people don't know too much about, but what I want to achieve in today's video is teach you more about this company, teach you about how well diversified this company is, and potentially open up your mind to a possible opportunity with this company, because at the current prices that it's at, it might be a huge bargain. Let's go. Hey guys, welcome back to a new video. My name is Nick, and on this channel we focus on positive investing. If you like these kind of videos, you like these deep dive videos, drop a huge like on this video. If this video gets 100 likes, then I'll make a deep dive on Alibaba. But either way, today what we're going to be talking about is Tencent. And Tencent is a stock that, if you've been following the channel, I do love. It's a Chinese stock. It has been hit recently because of all the stuff going on with Chinese companies, but this may be a perfect opportunity to buy into this company. So what we'll do today is look at the fundamentals, the technicals, balance sheet, and figure out if this company is really worth putting your money into. So Tencent's actually traded as TCEHY, and it's actually one of the largest companies in China, like I mentioned. So Tencent holds a lot of titles, and these are pretty impressive titles. It's the world's biggest investment company. It's one of the biggest venture capital firms in the world. It's the largest gaming company in the world. And it's also considered the most valuable social media company in the world. So these guys have a lot of things going for it. They're in a lot of different markets, and we're going to get into some of that right now. So some services that Tencent owns include WeChat, Tencent Video, and they even own partly games such as Fortnite, for example, because they have a stake in Epic Games, who's the company that makes Fortnite, for example. Now, a lot of you aren't aware, but Tencent's even in the cloud space for consumers. So this is another thing that they're trying to push into now, and they do realize that cloud is the future, so they're trying to get their exposure and their name out there for cloud as well. Now, something a lot of people don't know about Tencent is they actually have a large stake in a lot of US companies. So hear this, companies like Snapchat, Shopify, and Uber, two of which are public right now, and the third might go public sometime this year or next year. Tencent has stakes in all three of these companies, so they believe in American companies, and they invest in American companies before a lot of American investors are able to invest in these companies. So that's something to keep in mind, because this company knows how to find winners in the market, and any company that they back is definitely worth a second look at. Now, because of this, they also have a very well diversified portfolio, and they have way too many revenue streams to count, which is not a bad thing. It's actually an excellent thing. And it actually is what makes them an attractive candidate for some diversification in your portfolio. Even though you're just picking a company in China, it's so well diversified in China and globally that it may be a good hold to diversify your portfolio. So recently, Tencent has lost over $100 billion in total value, which kind of makes it a prime candidate for a potential buy opportunity here to pick up at a discount. So we'll get more into that in a bit, but just keep that in mind as well. And the last thing I do want to make note of is that Tencent's actually traded on the OTC market, so that's over the counter here in the United States. So there may be some risks associated with that, so beware and approach with caution if you do decide to invest in Tencent. So since Tencent's actually present in so many different markets and industries, they don't really have any one competitor that they're fighting head-to-head against. In some aspects, they compete with Alibaba with things like their WeChat Pay versus the Alipay system that Alibaba has. In other aspects, they compete with Baidu with things like Tencent Video versus iQIYI, which is what Baidu has a big stake in. In some aspects, like their gaming, they compete with companies like Electronic Arts, Take-Two Interactive, Activision Blizzard, to name a few of them. And although all of these are competitors in certain markets for Tencent, none of these have a massive hold on Tencent and a massive moat against Tencent, which makes Tencent very attractive because it can compete head-to-head with all of these companies, and it has the money to back itself, which we'll take a look at in a second, to do so. So I'm personally not concerned with any one competitor here at Tencent. However, I would continue watching all of these competitors, all of these markets that they're in, just to see how its rivals are innovating and developing things, because Tencent will have to keep up with innovation and will have to keep making acquisitions or putting more money into R&D to keep up with these competition or competitors here that we just talked about. So during the last 12 months, Tencent has really only had one analyst come out and put a price target on it. they put a price target of $59 and they are bullish on the stock. So this gives up about a 25% upside from its current price. So as you'll notice this analyst chart that I have is actually something new, and it's actually from a website called tipranks.com. So these guys are pretty amazing. I've been using this service for the last month or so, and I absolutely love their website. Tencent's actually one of the few that doesn't really have a lot of coverage because it is an OTC stock. But if you look at other companies, your massive FANG companies or any other company really out there, there's tons of analyst coverage. You get instant information when analysts upgrade, downgrade, whatever the stock. You see their price targets. There's a lot of insight here, and there's a lot more to the website as well. So if you want to sign up for free, I'll leave a link in the description. So make sure to sign up, click that link, sign up. It's absolutely free. You can upgrade your plan if you want to, but you can start off with the free plan just to figure out if it's something that you like. So now looking at the technicals here for Tencent, we can see that it recently reported earnings, as a lot of you are aware of, and this actually sent the stock to its lowest price in about a year. So the price actually came down to just below $40 or so, which was a complete bargain in my opinion, but we'll get into that in a sec. And this is where Tencent currently stands right now at around $45, $46 or so per share. So since its earnings, it has rebounded and it's entered kind of its downward channel again. As you can see from about the beginning of this year, it has been going downwards in a downtrend in a channel. And that's because most Chinese stocks are in this bear market right now, and Tencent isn't any exception to that. It is showing bearish signs if you look at the technicals here, because it is under all of its moving averages. So if you're trading this from a pure technical standpoint, it may be wise to wait this out to see if it can break this channel and start moving higher. So some fundamentals here on Tencent: it has a current PE of around 34.2, which is fair. It's not too high, not too low. It is higher than the market, but this is a massive behemoth growth company, which we'll take a look at. Their numbers are just mind-blowing. So a PE of 34 is not bad. Their biggest competitor, for comparison's sake here in China, we'll take a look at Alibaba, and Alibaba has a current PE of 51. So Tencent offers excellent value even when compared to other Chinese companies like Alibaba. So Tencent does currently pay out a dividend, and it's a very tiny dividend. It's actually 10 cents per share, which yields around 0.22%, and it's nothing really that I would pay attention to right now. However, this is a good sign for investors, because since they are paying out a dividend now, they will keep increasing it over the year is my guess. And this means that if you're a long-term holder in this stock, you could eventually have this as a dividend stock in your portfolio. Now looking at the balance sheet for Tencent, they have cash investments coming in at around 61.5 billion, debt at around 35.5 billion. So this gives it a cash debt ratio of around 1.73, which is healthy. You know, I like to see a ratio of 2 or above, sometimes even 3 or above. But for a company of this size with that much money on hand, I think that we are in a pretty good position here. So what I'd say really is that they have a healthy balance sheet with around 70% more cash than debt. And in this Chinese economy, which is kind of struggling right now, they are in a bear market, they are going through a little bit of turbulence. It is good to have a company that has enough cash on hand to pay off its debts if it needs to. So here's the fun stuff, and here's where my mind was just blown when looking at this company. I've been in this company for quite a while now, over a year, and I absolutely love it, and this is why. So if you look at the numbers here for Tencent, we can see that across the board, we have green. We have growth across the board. Revenue, income, operating income, net income, everything has been growing year over year, double digits. Net income has been growing at high double digits in the last year or so. Revenue has also been growing at high double digits at around 56 or so. So there's just a lot going for this company, and everything's looking good for it right now. The only downside I would say is that capital spending has been increasing year over year. It has been increasing substantially, almost doubling some years. So that's something to keep in mind. That's something to make note of, because that could eat into their profits and that could eat into their cash as well. So as long as they can manage this, not have it at some absurd amount, I think that we'll be okay here. The stock performance has been doing well up until recently. We've had around a 10-11% dip here in the stock since its high back in 2017, at the end of 2017. So in that aspect, this could be a good value because growth is slowing down a bit, but it's still growing and it's still a massive company, so it doesn't justify this much of a pullback. I don't think so personally, and that's why I feel this might be a great bargain right now. So keep in mind that their last earnings report which they did release about a week or so ago, disappointed investors because their profit actually fell 2% year over year. But if you look into it, this looks more like a one-time event than a recurring thing. So I believe the next quarter they'll actually be back on track and they'll actually be making a lot more money than they did this quarter. So nothing too concerning there, and I think it was just an overreaction really from investors. Looking at a graphical performance chart here, this gives you a better visual of how fast they're growing. You can see that their revenue has just been growing substantially, almost exponentially. It's starting to level off, but that's kind of expected when you have a company that's pulling in hundreds of billions in revenue. Now, if you look at the stock performance for the net income and the operating income, you can see that that's also been growing substantially and has a stock performance. So everything's kind of on track. The stock performance is trending down now as opposed to going up still, even though the other metrics are still going up. So that's kind of why this raises a flag, and this may be an opportunity to take advantage of. So kind of in summary here, we've talked about Tencent, we've talked about the business, but let's summarize what this company does, why this may be a good investment, and if I think it's a buy or not. So Tencent is a well-diversified business, and they are a leader in most spaces that they're in. So they have many revenue streams like we talked about, which has helped them succeed and thrive over the years. They're able to crush competition just because they have so much money on hand, and they make smart acquisitions in companies that they believe will be dominant in that space. Their balance sheet, like we looked at, is phenomenal. Their revenue and profit growth is off the charts, yet the stock price is still lagging behind. And this is mainly, again, like I said, due to the trade war and the Chinese market being in a bear market right now. So because of this, this may be an excellent opportunity to pick up a Chinese behemoth at a huge discount. So if you believe that the spaces that Tencent's currently in will continue to dominate, so these spaces are things like mobile payments, social media, video streaming, etc. If you think those things will continue to dominate over the next few years, then Tencent's actually one of the best global players in those spaces. So it may be worth looking at for an investment for that exposure. So lastly, what I'd say here is overall Tencent has proven that they will acquire and adapt to market conditions, and they will continue to be the #1 player in the spaces they want to be in. Their numbers are phenomenal. They continue to impress every single year with their growth. And even though they are a multi-$100 billion company, they're able to grow their profits, their revenue, everything, pretty much the whole business metric year over year. So for these reasons and the exposure that this gives you to the Chinese economy and different industries because it's such a diversified company, I would consider Tencent a buy at the current prices. So there you guys have it. That's my deep dive on Tencent. This is one of my favorite Chinese stocks. I've been talking about this on this channel for a very long time. Only recently have people picked up the stock and actually started paying attention to it, similar with Alibaba. So if you're looking for another Chinese company and Alibaba is the only one you have right now and you want to diversify that a little bit more, Tencent may be a good one to look at because they have the numbers to back it up. They're profitable and they're still growing. So hope you enjoyed this video, guys. Don't forget to invest positively, and I'll see you in the next one. Peace.